Hi, Nomi here. I wanted to share some brief insights with you as the financial markets have been in an uproar since last week. To start, let's be clear about what's not happening. The financial markets are not collapsing. There's no sweeping COVID like crisis. No major financial institution has gone bankrupt. History shows us that times like these do happen. In fact, if you look back to 1987, there was a moment really similar to this today. There was a crash in the stock market on October 19th, 1987, during a very strong bull market run. As I wrote in several of my books, stocks were considerably overvalued and faced rising interest rates. Of course, 1987's event's not a replica of today, but it does show us that the inner workings of the markets are complex and take time to unravel. This turbulent timing in August also has historical significance. Both the collapse of long-term capital management in 1998 and a freeze-up of European money markets in 2007 occurred in August. As someone who has worked on Wall Street and for major financial institutions, I can also tell you firsthand that traders are often on vacation in August. Around now, market liquidity also dries up. All these factors can fuel exaggerated moves in the markets like we're seeing. Now, that does not mean that the sky is falling, but it does mean that we could be in for more financial turbulence. But a boat captain doesn't work to understand the storm once they're already at sea. It's all about understanding the prevailing conditions on the ground and how to steer the ship through that matter. I'll break down what's happening in the macro space and detail what's unfolding. At a macro level, concerns loom over U.S. economic growth. Investors are also coming to realize that the Fed has likely made a huge policy mistake by waiting to cut despite weakening economic and labor conditions. Negative market technicals have also risen to the surface. So, where does that leave us with what's unfolding today? Right now and over the last several days, major investors with massive and leveraged positions are unwinding them. Unfortunately, that's mainly happening all at once. The unwinding of these positions is primarily taking place in something called the Japanese carry trade, which you may have seen in news headlines. The plunge in global financial markets from Japan to Korea and beyond is likely driven by these international financial linkages and crowded trades that are unwinding. But to put it into perspective, the sell-off over the last several days only puts the U.S. markets at levels we saw in May. Year to date, the overall U.S. market is still up nearly 10%. Yes, the markets have gotten very ugly very fast. But even the volatility index, or the VIX, has seemingly settled. So for those interested in the markets, please remember to stay calm. Opportunities are available if you're patient, rational, and unemotional. That's all for now. We're going to be in touch real soon with our latest Prinsights Pulse, so please keep an eye out on your inbox. And thank you so much for tuning in.